What if I told you the absolute biggest stock breakthroughs every single year happen within a 7-day period, and that there's a way to predict with absolute certainty the exact day, the exact hour, and even the exact minute these breakthroughs will explode? And these eruptions, they're not just predictable, they're also massive. A mind-blowing 733% bigger than any normal move a stock might make. I'm here today to show you how you could use this anomaly to make profits as high as 103% on average, 52 amazing times a year, returning annualized gains of over 1 million%. It might sound crazy at first. I wouldn't blame you for being skeptical, but the fact is it gets even crazier, because you can position yourself a full 2 days ahead of time to profit from these price eruptions. In fact, I'm going to show you how you could use this 2-day advantage to turn these eruptions into gains that go way beyond average. Gains of 150%, 231%, 439%, even 954% in 7 trading days or less, over and over again. I'll even show you how you could start collecting mega gains like these right now. And just to prove it to you, you're about to see all the details on how to play Harley-Davidson 2 days ahead of time for a gain I'm estimating to be 102%. A gain you can cash in on in 7 days or less. 2 decades studying these price eruptions and predicting them 2 days ahead of time, and frankly, making a ton of money. Imagine what you could be doing right now given the chance to double your money in 7 trading days over and over again. You might be on your fishing boat in the Caribbean, ready to pull into your own private $1 million dock. That's why it's important to listen up. For the first time ever, you're about to see step by step exactly how you can identify these price eruptions 2 days ahead of time and turn them into cold hard cash. You may have heard me predicting these price eruptions on the news, like CNBC, Fox Business News, Bloomberg News, and others. You may have read about my research in the Wall Street Journal, Barron's, USA Today, or the New York Times. You may have even profited from one of my recommendations over the years, the same ones that have placed me in the top 2% of more than 10,000 independently ranked investing experts. But while I've spoken publicly for years about how predictable these price eruptions are, I've never revealed the proprietary system I use to identify them 2 days ahead of time. That's because up until now, only private clients who paid high commissions to a boutique investment firm have had access to my recommendations. But now into gains of 103% on average in only 7 days. Not only that, but you can do it over and over again, week in and week out, 52 times a year, with above average gains running as high as 954%, over 10 times your money. This system is so consistently reliable, I'm putting my personal guarantee behind it. It'll produce a winner 8 out of every 10 times we go to bat together. That's right. You get my personal guarantee on that, as you'll see in a moment. That's how powerful this system is. But most importantly, pulling in 231%, 439%, and they're easy to see today, they'll be easy to see tomorrow, and they've been easy to see for the past 3 years. In fact, going back to January 1st, 2014, and right up to this very day, I applied my stock market seismograph to every one of the 6,000 price eruptions that occurred on the biggest, the most liquid, and the safest stocks on the S&P 500. And what I found was that my seismograph correlated to 8.3 out of every 10 huge moves 2 days ahead of time. Again, that's from January 1st, 2014, right up to the present day, to eliminate any lag and eliminate any doubt. Now, using examples from my extensive historical testing, let me show you the kind of money you could be looking at. Here's a stock market seismograph of Akamai Technologies. You may have heard of it. It's a cloud service provider. See that big spike in the chart? Looking at all the past data, my seismograph detected a new triple-digit profit opportunity on October 21st, 2016. That was 2 days before the price eruption. Once again, leaving plenty of time to get in before the big move played out, which is exactly what happened. Within a 7-day period, starting on October 25th, Akamai shares shot up fast. Using my system, you could have turned that fast spike into 231% gains in just 7 trading days. Let me give you another recent example. This is a stock market seismograph of a company called People's United Financial, a savings and loan holding company. The stock ticker is PBCT. Most people have never heard of the company. And on October 18th, my seismograph spotted an opportunity for triple-digit profits. See that big spike on October 20th, 2016? That shows people's latest big price eruption. This would have given you plenty of time to get in and position yourself for big gains before the stock shot up. In fact, using my system, you could have turned that jump into 150% gains by October 27th, just 7 days later. And Peoples is just one of hundreds of stocks that experience huge 7-day price eruptions. Take a look at my seismograph of NVIDIA, the semiconductor company. See that big spike on November 10th? That's the most recent price eruption on NVIDIA. 2 days before the eruption, on November 8th, the seismograph extracted this triple-digit opportunity from a mass of data, giving you plenty of time to get in before the eruption. Sure enough, NVIDIA experienced a massive price eruption on November 10th, and by following my seismic profit system, you could have turned that eruption into 954% gains in only 7 trading days. That's more than 10 times your money in 7 days. Imagine starting out with $1,000 on Monday and heading to the bank with more than 10 grand 7 days later. Exceptional? Of course. Heck, even a fraction of this would impact your bottom line. Just consider that in the past 3 years, NVIDIA has typically moved an average of 2% during any given 7-day period in the market. But during this, and that my method gives me the inside track on when these moves will take place, right down to the day, the hour, and even the minute. In fact, my 3-year analysis of the S&P 500 shows that stocks make 733% bigger moves on average during these precise 7-day periods. And of course, the bigger the move, the bigger the potential profits. Best yet, because we know exactly when the price eruptions will occur, you can position yourself to profit 2 full days before the eruption occurs, and you can pocket any gains within just 7 trading days. So here's my question. If you knew that a stock made 17 times bigger moves during these 7 days, and you knew exactly when this price eruption was likely to happen, right down to the minute in many cases, and you had access to a trading system with my personal guarantee to hit big on 8 out of every 10 price eruptions it uncovers, why would you be risking your money any other way? To explain how it works, let's go back to the earthquake concept for a moment. The stock market seismograph shows you the wave pattern that creates these massive price eruptions, just as a true seismograph shows you the seismic waves that move through the Earth's crust during an earthquake. But the magnitude of those seismic waves is actually measured by the Richter scale. It's a mathematical tool that tells you how big the wave actually is. And that's exactly what my proprietary tool does. Only instead of measuring the size of earthquakes, it measures the potential size of the price eruption. It's my own Richter scale for stock prices. And every single day, my seismograph calculates the Richter scale score for every stock in the S&P 500. The score itself is made up of 10 separate mathematical equations. These are based on key factors that are scientifically proven to trigger price eruptions. I'll take you through the calculations in a moment, but for now, let's just say that each one of those equations boils down to a simple yes or no decision that's represented by a 0 or 1, just like computer binary code. A score of 7 or above means the stock is poised to experience a massive price eruption to the upside 8 out of 10 times. A score of 3 or below means that the stock is set to experience a major price eruption to the downside 8 out of 10 times. And a score between 3 and 7 means the stock may experience some minor tremors in the market, but nothing big enough to trigger massive gains. So my system discards those stocks automatically. Every day, my seismic profit system collects over 750,000 data points on individual stocks. It searches for all potential price eruptions with the Richter scale score of 7 or above. And the Richter scale score is incredibly accurate. In fact, going back and applying my Richter score to over 6,000 price eruptions, it racked up an incredible 83% win rate. Of course, as everyone knows, hindsight is 20/20. I can't guarantee what's going to happen in the future. Nobody can do that. But the research here is undeniable. It shows you could have collected on average 103% gains on each of these price eruptions using my strategy. And please note, the 103% average includes every single trade, both winners and losers. And of course, that's just the average. You'll have the very real opportunity to post exceptional gains of 231%, of 439%, and gains running as high as 954%. And the really amazing fact, you could have collected each win in 7 trading days or less. Let me show you how this works with another concrete example, a price eruption on Garmin from July 27, 2016. Now, 2 days before the price eruption, Garmin's Richter score hit an 8. That meant there was a huge probability that the stock was about to make a massive move to the upside. Most traders had no idea this move was coming. Wall Street was shorting the stock left and right. Even option buyers were betting against the stock. But if you were paying attention to the Richter score, you would have known that this was one stock you did not want to short. Instead, you could have gotten in 2 days ahead of time. And when the stock surged more than 23%, you could have turned that big jump into 738% gains by August 3rd. Look, on any given 7-day period, Garmin moves less than 1%. 5.2 to be exact. It's minuscule. And this is the way most big stocks move, like slugs. Without these big price eruptions, it would take Garmin shares over a year to move 23%. But last July, it jumped 23% in just 7 days. That's a 45 times bigger move in 7 trading days than any other time in the market. Now, 23% is a fast move. You rarely see stocks spike that way. But using my system, you can take these fast moves and slingshot them into astronomical profits. In fact, using my trading method, you could have turned that 23% move into a massive 738% gain within those 7 days. And it's so consistently reliable that you know right down to the day, hour, and minute when these eruptions will likely occur. So again, I just have to ask you, why wouldn't you use price anomalies like this and make a fortune for yourself? Especially when you can do it over and over again on every stock in the S&P 500. Take a look at this price eruption on microchip technology. Ahead of the eruption, the Richter score on microchip was an 8, signaling the potential for a solid price jump. Sure enough, the stock surged 8% in a week, which is impressive considering how fast it moved. But you could have used my seismic profit system to turn that price eruption into a 395% win in just 7 days. Or consider Paychex. The stock market seismograph pinpointed a price eruption on June 30th, 2016. Ahead of the eruption, the Richter scale score on the stock was a 9. That signaled that Paychex was likely to make a major move to the upside. Sure enough, the stock rocketed more than 10% in 5 days. Now that's a pretty big jump, but your potential profit trading this event the way I trade? That's a whopping 354%. Nothing else on earth can pinpoint these fast moves and turn them into these huge potential gains. 16. 2 days ahead of the eruption, the Richter scale score was a 9. So there was a very high probability the stock would erupt to the upside. And it did, moving more than 15% higher. In fact, Albemarle jumped 31 times higher than normal during this 7-day price eruption. That's how powerful these anomalies are. Best of all, with my seismic, you would have known better. Sure enough, the stock spiked nearly 10% in just 1 day, and another 11% over the next 7 days. Big price moves. Simply put, it's incredible accuracy. The score is based on 10 key factors that every big stock eruption displays, and my system pinpoints these factors 2 full days ahead of time. It assigns 1 point to each critical piece of the pattern. 1. What is the trend of the stock's 50-day moving average? Is it trending higher or lower? 2. Where is the current stock price sitting relative to that 50-day moving average? Is it above it or below it? 3. What's the trend of the stock's 200-day moving average? Is it trending higher or lower, and for how long? 4. Where is the current stock price sitting relative to that 200-day moving average? Is it above the line or below it? 5. Where is the stock's 50-day moving average relative to its 200-day moving average? 6. Has there been any significant change in the stock's price pattern ahead of the eruption? 7. What's the distribution of the stock's price, its volatility, over the previous month leading up to the eruption? 8. What is the option activity ahead of an eruption? Are traders loading up on calls or loading up on puts? 9. How many shares of the stock are sold short ahead of an eruption? And how many days would it take traders to cover those bets? 10. What are the analyst ratings ahead of the eruption? How many are covering it? How many buys? And how many sells? These are the 10 critical indicators that tell you if a stock is about to experience a major price eruption. If the score is 7 or above, the stock is likely to erupt to the upside. And if the score is 3 or below, the stock is likely to take a plunge. All of my research on over 750 million historical stock price and data points for the past 3 years shows that the Richter score can pinpoint which stocks are about to experience a massive price eruption with 83% accuracy. Best of all, with the Richter score, you'll have the opportunity to turn those big moves into gains of 103% on average in only 7 days. And of course, that's just on average. You'll have the opportunity to pocket as much as 9 times that amount. So what is it that triggers the massive stock price eruption? Let me explain. The phenomenon behind these anomalies, those specific and unique price eruptions, was first documented in 1968 by 2 men named Raymond Ball and Philip Brown. Oddly enough, they were both from Australia. 2 young men passionate about numbers and working on their PhDs at the University of Chicago, the hub of financial research. And what they proved turned the financial world on its ear. In fact, today, their discovery is cited as the most influential research in accounting during the last century. Yet I'd venture to say fewer than 1 in 1,000 investors have ever read their paper. And what they proved is so simple, so direct, and so miraculous that it's astounding. Namely, that a company's earnings can directly predict the direction of its stock price, up or down. It's a finding that blew away over 100 years of efficient market theory and identified stock anomalies that could make people extremely rich. Now, usually, the earnings a company makes are kept secret. Yet because of a 1934 SEC regulation, companies are forced to make certain accounting information public. And when that happens, my seismic profit system swoops in and turns those anomalies into massive profit opportunities. And because you know the exact date and time of the event, you can legally position yourself 2 days ahead of it and play it for a shot at triple-digit gains. In fact, multiple studies show it's the only consistent price anomaly that has not been arbitraged away by sophisticated Wall Street trading systems. That's why I play earnings, because they're scientifically proven to deliver abnormal returns. That is, returns that are much bigger than typically expected. And using my seismic profit system, I can leverage those abnormal returns into triple-digit gains over and over again. Now, I've known a lot of people who've tried to trade on earnings, and most of them fail miserably. I know because I've spent the last 20 years studying every mistake they make. Their biggest problem is noise. That's why my seismic profit system filters over 750,000 data points on hundreds of stocks every single day. That's why I deal in hard data. I'm not dealing in opinions, talking heads, spin, emotions, or any other BS. Data is fact. And that's what enables me to pinpoint the biggest price eruptions that come from a company's earnings. Because when you can know 2 days ahead of time with up to 83% accuracy which way the earnings are going to go, you can make a bundle. Gains like the 537% the Richter scale could have led you to on General Mills earnings, or the 738% on Garmin earnings, or the 395% on the microchip technology announcement, or the 424% on the Hormel Foods earnings release. I could go on, but you get the point. These eruptions are the single biggest source of ripe for a major pop. At the time, Varian was the 6th most shorted stock in the entire S&P 500. Not only that, but traders were loading up with puts, a sure sign they were banking on the stock to fall. This is exactly the type of profit anomaly that my seismograph targets, because if Varian Medical delivered, as my Richter score indicated, the price would erupt. All those short sellers would have to throw in the towel and buy back the stock, and the option traders would have to unwind their positions. And that would trigger a massive rally, which lets me put their money in my pocket. And that's exactly what happened. Using my system, you could have turned that massive rally into 447% gains in only 7 trading days. Now, these profit anomalies occur on the opposite side as well. Just look at Fox Entertainment. 2 days before its August 5th, 2015 earnings report, the company's Richter score was a 2. This showed that the stock was about to break to the downside, but the street was still betting on a turnaround. The analysts loved the stock, with 9 out of 10 rating it a buy or a strong buy. But if you knew my Richter score, you would have known that they were dead wrong. In fact, Major media stocks just lost a total of $37 billion in market value that week. Based on my Richter score, Fox Entertainment would likely suffer the same fate. And just like the score predicted, Fox dropped nearly 12% when the earnings went public. You could have played that price plunge for 439% gains in only 7 trading days. When you can capture cash like this over and over again, all year long, week after week, you can stockpile a lot of cash very quickly. And it makes sense, really. That's because my system scores every stock in the S&P 500 before its earnings hit the news, and it pinpoints any stock with a Richter score of 7 or above or 3 or below. And when I'm running things in real time, I won't just stop there. Using the data generated by my system, every stock you see will be put through a rigorous confirmation screening before I recommend it. You see, my goal is to absolutely eliminate any opportunity that does not have the potential for triple-digit windfall without taking on triple-digit risk. My confirmation screening looks for things like splits, mergers, acquisitions, or spinoffs, feeding frenzies ahead of earnings announcements, technically overbought or technically oversold situations, buy the rumor or sell the rumor situations, technical support or resistance. And let me confess something right now. This extra confirmation check means that I simply will not recommend some profit opportunities that my Richter score uncovers. But honestly, I'm sure you'll agree that it's worth missing a few potential profit points to give you the best chance at banking average gains of 103% and profits on 8 out of every 10 trades, and above average shots at 954% or more. This unique way of making money is extremely easy to use. Simple. It's backed by years of success and has the potential to put hundreds of thousands in your pocket year after year. Now, a 103% average return per trade is amazing, but when you can do it in 7 days, it's almost obscene. And if you cashed in every 7 days, the return would blow your mind. Go ahead and calculate the annualized rate of return. You know what you'll get? 1,069,016%. That's more than 1,000,000% annual rate of return. Now do you see why I've dedicated my entire career to trading earnings? Because it's the most lucrative game in the market. Now let's be clear. I'm not promising you'll see 103% every 7 days. It's possible there are going to be plays that deliver less than that, as well as some rocket ships that deliver far more than that, like the 954% returns you could have banked on Nvidia last November. And please remember, all investing carries risk, no matter how much data you have on your side. But with big moves like these, and the potential for a remarkable 83% win rate, with my 20 plus years of analyzing earnings in incredible detail, and my confirmation screening that eliminates companies not likely to make a big move in the right direction, you can see why I'm willing to guarantee that 8 out of 10 recommendations will be winners, each one with the potential to double your money in 7 days. Look, I'm a quant jock. I love math. I love systems and analyzing patterns, and quite frankly, I'm good at it. When I discovered my skill in college, I was told I should either become a stock analyst or a meteorologist, because both of those jobs require taking massive amounts of constantly changing data and turning it into a predictive tool. So I could use my passion to predict hurricane paths or to predict big stock moves. For me, it was an easy choice. I took a job at Prudential Securities in the summer, and I loved it so much I became a licensed broker while still in college. Back then, Wall Street was a lot less sophisticated. As long as you knew which guru to listen to on the squawk box, you could make money. But suddenly, as investing gurus like Peter Lynch and Warren Buffett gained popularity, Main Street investors started paying more attention to the market. And as regular investors started getting more sophisticated, I noticed the market started to move in odd ways. I soon realized that if you could predict that behavior, you could make a killing. Not surprisingly, a lot of this odd movement would come from earnings. In fact, it may well be the only source for finding huge price anomalies you can get rich on. So I set out to determine why some earnings trigger massive price eruptions and others did not. And more importantly, to figure out if I could predict it. I started charting stock movements, believe it or not, at first using a pencil and graph paper. As the years went by, my graph paper turned into an Excel spreadsheet, then a massive database. Then it morphed into a sophisticated algorithm, and that's what I used to calculate my Richter score. In fact, I collect more than 750,000 data points on the S&P 500 stocks every single day, then use this data to calculate my Richter scores. This rich source of data is part of the reason I've been so effective in helping my former private money clients make huge profits. In fact, my trading recommendations have been so successful that I'm ranked in the top 2% of investing experts in an independent listing of more than 10,000 financial analysts, hedge fund managers, and corporate insiders. It's also why I'm frequently asked to appear as a guest on national media outlets such as CNBC, Fox Business News, and Bloomberg News, and why publications like the Wall Street Journal, the New York Times, and Barron's call me to ask my opinion on the market trends. The bottom line is this: if I can get 100% gain in 7 days or less, over and over again, I'm taking the cash. And the best way to capture a ton of these triple-digit winners in the shortest amount of time is to trade earnings the way that I am showing you today. In fact, it's the only way that I know of that could have turned a 33% move into a 954% profit. That's why I recommend the simplest of all fast money plays: simple options. Now, I'm not talking about those risky, complicated options you often hear about. I've got zero interest in high-risk lottery stuff. I'm talking about super conservative, extremely simple moves you can make in about a minute with the lowest risk possible and the least amount of cash on the line to boot. It only makes perfect sense when you want to generate a lot of cash fast and with little effort. Let me show you what I mean using my extensive historical testing. Take a look at General Mills. 2 days ahead of its earnings, on June 27th, General Mills had a Richter score of 8, and the stock was trading at $66.19. Now, you could have plunked down $66,190 to buy 1,000 shares of General Mills, and you would have earned a pathetic 3% dividend in 12 months, which theoretically would have earned you a couple grand on your money. Or you could have made a short-term earnings play my way for as little as $710, and you would have banked 537% gains on the price eruption on June 29th. That's $3,810 in profit in 7 trading days. Cold, hard cash. Not only that, but instead of forking over more than $66,000 in cash, you were in for less than $1,000. Now, I don't know about you, but I would much rather plunk down $710 for a chance to pocket a quick $3,810 in profits in 1 week than tie up $66,190 for a year just to collect at best a tiny dividend. Trading this way allows you to jump in and out of the market with a small investment and the opportunity to make thousands of dollars in just 7 days. Look, you can get into most of these amazing plays for as little as $230 and then keep doubling your stake over and over again in just 7 days. Here's some great proof. You could have bought 100 shares of NVIDIA back in January 2014 for $1,567. It's been a high flyer for the past 3 years, and you could have made an impressive $9,107. But trading my way could have made you 36 times more money, all starting with the same $1,567. The first opportunity was on February 10th, 2014, 2 days before NVIDIA reported earnings. My Richter score hit 10, signaling a big move ahead. Trading with the help of the Richter score, you could have pocketed $7,902 in 7 trading days. That's a 504% return. The second opportunity was on May 10th, 2016, when the Richter score hit a 9, 2 days before NVIDIA was due to report. If you'd reinvested the $7,902 in profits you collected on your first trade, you could have pocketed $34,713 just 7 trading days later. That's a 439% return. But you wouldn't stop there, because my Richter score hit a 9 again on November 8th, 2 days before NVIDIA's earnings announcement. If you'd reinvested the $34,713 you made on your second trade, you could have pocketed 6-figure profits of $331,266 on NVIDIA trading the way I do. That's a 954% return in just 7 trading days. So to recap, that's a total of $331,266 in cash on just 3 trades. And you could have done it in only 21 total trading days. So again, it just begs the question, if you could bank $331,266 in cold hard cash by trading for just 21 days total, That's because you're in and out in only 7 market days, so you can read the system. I've seen it in action. And when you see it for yourself, I know you'll be thrilled with how quickly the profits add up. It's amazing how fast the money can pour in when you're seeing opportunities to bank profits of 103% on average in under 7 trading days. My Richter score pinpointed 8 plays the week of October 21st, like an obscene pile of riches. You could have played all 8 for as little as $2,927. Now, this wasn't some long-term stock play where your cash is locked up for months or years. All plays closed in 7 trading days or less. The average return on all 8 plays was 152%. By the end of the first week, you could have pocketed $7,376. Then, how about banking $20,521 the following week? Because the next week, you could have made a boatload of money again. You could have made 3 different earnings plays starting on October 25th and closed those plays for an average of 194% gains. Invest $6,980 and you could have walked away with $20,521. That's a total of $27,897 for both weeks. Now, of course, not every price eruption is going to lead to gains. No investing strategy works 100% of the time. But I'm telling you, trading this way is incredibly fun. It's like getting a whole bunch of bonus checks all at once. And for you, there's virtually no work involved because I do all the heavy lifting. Let me be completely clear. I'm not giving you some piece of trading software you have to spend hours learning to use. You do not have, and I expect my system to recommendations you received from me, as published on our track record, will be closed out as winners, or else you just let my team know and you'll get back a 100% refund on every penny you paid for your subscription. What's even better is that, guarantees aside, I'm not expecting just minuscule 9% or 10% returns here. I'm aiming for a financial future.